bulls provide a maximum gargantuan gape into the bottom of the 10K Bear Boys once again. The most absolutely insane theory about what the Fed is doing and what will happen to Bitcoin emerges. And what if I told you it's bigger than the empty space inside a Bitcoin permabear's nearly non-existent brain? Right now, the price of Bitcoin is having a little itsy-bitsy pump after yesterday having a little bitsy oopsie immediately after the FOMC meeting. But we're going to be talking about some absolutely gigantic, mind-blowing things that do not directly relate to the price right now, however, absolutely will change everything. And I want to start off by looking at this. So, did the SEC just attempt to tank crypto? Well, I'll give you the answer to that most likely. Yeah, right? It's something they seem to have been doing for a long time here, but right after, immediately after the FOMC meeting, which keep in mind also, the Granny Yellen herself also had some remarks while Jerome Powell was even talking. The SEC announced several charges and or intent to investigate several claims, including some that look obviously insignificant and fraudulent. Includes Coinbase, Justin Sun, Lindsay Lohan, Jake Paul, a bunch of other people. Very interesting timing here. Again, is it a blatant attack on crypto? In my opinion, I mean, so many things are specifically only done by the government or the Fed or whoever to try to harm crypto. They see crypto as their number one opponent here. And, I'm sure you've all heard about Operation Choke Point, all of that. I mean, it's very real here. It seems as though, there's a big battle going on. But if we take a look what is happening with Bitcoin's chart right now, and we compare the Wall Street cheat sheet psychology of a market cycle compared to Bitcoin, the similarities are pretty remarkable. And it doesn't take a lot of looking at this to see that, it's very likely that we're at the very beginning of the disbelief part of this cycle. And again, I think this is heavily exacerbated by the fact that banks are not doing well. And I'm going to be getting into that more in a second here. But also the Fed's imminent, in my opinion, pause. Because I don't think what's happening right now can go on much longer within even the next few couple of days, weeks. This could happen very, very quickly here. And the federal funds rate is now above core PCE, their preferred measure of inflation, the Fed's preferred measure. And the only other period with a Fed's fund rate above core PCE was 2018-2019 that ended with Fed rate cuts in 2019 and a swift move back to easy money. And according to Charlie Below here, market participants seem to be expecting the same swift move back to easy money today, with rate cuts priced in starting in July and a Fed funds rate below 3% by the end of 2024. So within the next roughly 21 months. And the market doesn't seem to believe what I believe was Jerome Powell's bluff yesterday, that they made it very clear they wanted to avoid any talk of a pause, even though I personally don't think there are many more options here. This was a clip from yesterday during the meeting, and I agree, it is a very interesting part here. And this is in regard to Credit Suisse.
I'm wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
And even if you don't want to read into this too much, because people that are reading into it are talking about touching your nose like that is usually a sign of deception. It's body language in regards. I mean, what does it say here? If they're doubtful about what is being said, or if they're rejecting the idea, nose touching or rubbing is a body language. I personally do believe that body language is body language is 90% of communication, and speaking is only 10%. So I do agree that his body language is kind of weird there, but I thought all of that was weird even before he did the nose touch, where he said, so far, and just the way he spoke about it. So really, that's no shock. It should be no shock that basically what he's saying, or in my opinion, what I'm inferring from what he says is, this isn't solved yet. I think a lot of other banks are going to have issues with this. And I think that regardless of if you look at this clip or not, I think that's pretty obvious. And similarly, this article points out the current crisis having echoes of 2008, however, most likely to be much worse because it's a toxic byproduct of the government's response or lack of response to the 2008 crash. And it has the potential to be a lot worse. And I've been saying that. I agree with that. Currently, we're also seeing the stock market, yields, and DXY head in a negative direction all at the same time. Granted, the stock market is doing a little better, but ultimately we're seeing something weird here. We're seeing Bitcoin do really, really well over the past 2 weeks, and everything else not necessarily doing that good. But with the Fed hiking rates, it will cause more losses on bank balance sheets. Unrealized losses are already over $500 billion, up from $8 billion a year ago, which is insane. Yellen said the FDIC will not guarantee all deposits, and equity and bond holders of regional banks can get wiped out if there's a bank run. And we've seen this happen. Had 5 banks already fail in the last week and a half, doesn't end well, basically. And I personally think it is a matter of time before we start seeing this more. And based on Janet Yellen's comments yesterday, it's very likely we will continue seeing this, right? It's literally a matter of time. With that as well, we did highlight how Coinbase got a Wells notice from the SEC. Basically what that means is that the SEC is informing them they're considering bringing enforcement action against them. We're seeing the SEC go all out here in jurisdictions that they don't have jurisdiction over. And there's a clip as well here about Janet Yellen saying the U.S. not considering blanket insurance for bank deposits. But then also she said in opening remarks, it's important to be clear, shareholders and debt holders of failed banks are not being protected by the government. So again, this is like a green light to let banks fail, right? That's like the only way to interpret this. And it's what we're seeing happen as well. So what's actually happened now? So the S&P is actually currently above a very long-term downtrend, the only trend line that matters on the stock market for the SPX. Bitcoin itself is actually doing a little bit better currently, still potentially in the middle of a breakout here. Currently, we're in between the crunch zone, which is basically situated between 32,000 and 25,000. This level here, I think Bitcoin has its work cut out for it, okay, right in this zone. So, and if we also pull out the VPVR, you can see that the crunch zone has like the least amount of accumulated volume. So you see a ton of volume right here, a ton in this area, and then it picks up heavily kind of up here. But the crunch zone, aside from the 30K level, exactly at 30K, aside from that, it has like the lowest areas of accumulated volume here. So the crunch zone, we could see these moves happen in a very quick manner. We could see Bitcoin, like we've already seen it in the last couple of like 20 minutes here, have a nice move to the upside with fairly little resistance. With that being said as well, DXY getting completely dumped on still, got rejected at this last zone as we've been talking about over and over for months at this point, and Bitcoin potentially continues to lead this macro, absolutely ginormous falling wedge breakout, which would put us, in my opinion, at least to even the low $40,000 level over the next few weeks, if this is actually a true confirmed breakout, which as time goes on, it looks more and more likely that could be the case. And still currently I'm up over 20,000 USD trading this breakout. And if you're interested in doing the same, you can sign up with the links below, massive deposit bonuses and sign up bonuses. In addition, 0 trading fees with spot with Bybit when you sign up with the link in the description below. In addition, over 50,000 in deposit bonuses with those links specifically. Arbitrum just went live here. Deposit, trade, and stake Arbitrum to share in a 400,000 USD prize pool. You can see all the rules here as well. You can just pause the screen if you want to read some of this. But if you deposit 250 ARB to earn a free 25 USDT, in addition, you'll be entered to a 50,000 USDT prize pool and a lot of other things as well. If you're interested, you can just pause the video at any of these points and read all of that there. And the final thing I want to say really is that if we truly do get a bank run, if we truly do get another bank collapse or more of them, how do you think it will benefit Bitcoin? Because so far it has been the strongest bullish narrative that Bitcoin seems to have maybe ever had, which is just a very reaffirming thing. Even if Bitcoin goes back down to 25,000, even if it retests some maybe lower levels, the narrative and the belief now, I think, has changed greatly in just the last week because we're seeing Bitcoin do something that I think some people were questioning if it would, and that is start to really become an option outside of the traditional financial system and an option of actually putting your money somewhere that it cannot be printed infinitely and, I mean, pretty much made worthless.